We started this morning with a panel on market structure. I think it was quite interesting to hear how the things are complicated in terms of the definition of organized trading facility, for instance, on interoperability issue, on open access. So we will see, I think, more months of discussions about how the final text should be. And basically we will we have also looked at how market structure should be regulated, and the feeling was that the market making obligation was not appropriate, and there could be chances that we won't see this in the final text. On dark trading, I mean, it was quite interesting to hear the various position and the role that LiquidNet as a player is playing in this market. So basically these were the main points. In the second panel we were discussing about transparency and investor protection. It's interesting to hear that the industry is moving, but from, let's say, from the investor side is moving at a slow pace, and it's quite interesting to see that there are key issues still to be addressed, like standardization and unbundling of data, which have been tackled perhaps from the wrong side, and this is an issue that perhaps will come out in the coming months when competition authorities will finally look into this. We have discussed also briefly about execution policies and best execution, and there is still a sort of diverging views between retail investors and industry about how the definition of best execution is done, if this is applicable and can be supervised. The role of execution policies must be more understandable, and Guillaume made it clear that MiFID II does not address as they would like to see these issues. And then we had an interesting discussion on investment advice. It's clear that investment advice has conflicts of interest. The solution that the Commission is proposing for some is quite interesting because it allows the possibility to have parallel systems in place, but for others like Lindsay Rogerson was different, saying basically she's more in line with the UK approach of banning any kind of inducements for investment advice. So there was another point concerning the complexity of products, but we haven't touched this more into depth, so I'm not going to give conclusion on this. On fair country rule, basically, Nick Collier mentioned the role of international financial institutions like Thomson Reuters, data providers across many countries, and the issue of equivalence that comes, especially when you talk about eligible counterparties, so trading among eligible counterparties. This principle may be a huge problem for the industry. We move then to the OTC derivatives panel, which was interesting because we tackled some of the key issues in market infrastructure, which is interoperability and the open access. And it came out that basically more than interoperability, we need connectivity among market infrastructure across the globe. And this is something that will come out in the coming years, because market infrastructure is becoming more integrated, and technologies are allowing investors to choose where they want to trade, clear, and perhaps settle their products. So Niall Cameron made an interesting points about this, and he also mentioned the points on trading obligation, and the fact that this the list of those products that can be traded and should be traded on organized platforms should be a subcategory of the clearing list, derivatives list, and that, of course, this list must be flexible and updated over time by financial authorities. Should not be set into stone, basically. Then we had an interesting discussion concerning OTFs, but I already mentioned that the obscurity of the definition of OTF is actually making unhappy everybody in the industry, not only those that are, let's say, against, but also those that are in favor, because it is difficult the way this definition could be effectively in practice be implemented. Well, that was another point that we mentioned, was the pre-trade transparency for non-equities, and in particular derivatives. It's still unclear what are going to be these liquidity measures, and the ESMA is looking to this, but still we didn't get a real answer. I think we will see interesting discussions in the coming months, but we're still behind on schedule on this point. On the last panel, I thank the panelists for the interesting insights. I think that the overall problem about commodities and price correlation, financialization must be looked into detail also from the physical markets point of view, and there are some issues that came out concerning the supervision of physical markets. On the exemption, we need to be careful that basically we're not going to hinder the commercial interests, but of course we need to also be careful that many energy firms are running business that looks like an investment bank for some aspects. So this is in the eye of regulators, and this will be perhaps tackled as it is clear. We discussed about position limits. There is no clarity in MiFID how these position limits should be designed. We can look at deliveries, we can look at size of the market, size of the players. Of course, the US model will be inevitably a model for Europe. If we will follow it or not, this will be final decision of regulators. Interesting to hear that the Securities Law Directive, which is at the center of many of the discussions that we had today, will come soon. So just want to thank you for the attention, and thank you for the panelists for the interesting discussion today. Thanks a lot.